Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. It is Thursday, and it's been quite a week. Yesterday we had that massive reversal when we, undercut that 1820 SPX low, and today we didn't know what to expect. Yesterday, if you took some longs home, which a lot of times you do into a reversal, you try and get some follow-through. So I would say at least it was constructive action. Where I know this morning before the morning call, we were down 7-8 handles, and I was like, all right, let me buy a little bit more, because I know if we were up, I would be selling it. And then by the time I came out of the morning call, market was up a little bit. You could have sold a little bit from buying in the hole. And then you even had a trade when we took out yesterday's high in the spiders. And then, I think what was probably more constructive was that we just didn't run away all day and trap any shorts. It was pretty methodical. Let me show you what I'm talking about. So if you go to the chart of the SPX, here was the double bottom from 2015. Here was your bottom tail reversal, and then today, we opened up a little red and held a decent portion of it. We're still below the 8-day. We didn't get into massive resistance, so at this point, just a day in the life. I think the more time that perhaps we spend, in this area, showing some commitment to this move, maybe the better chance we have breaking this 8-day and seeing a bit of higher prices, where I think a wall of resistance would be here. But as of now, it's kind of hard to tell. Some mixed signals today. If you look at the spiders, the spiders did give you a little bit of follow through today, and follow through is food for the soul for a trader, right? What do I mean? It means you want to, if you bought in the hole, open down a little bit, held high. Remember this morning I talked about areas that should hold. My whole morning note was talking about what should hold from yesterday's move, and if it's buyable. And then you also had another buyable trade that didn't hold it, that you could have sold into as you knew we were getting close to the 8-day. That's been resistance this whole way. So by showing the 5-minute, you'll see first things first, you go back to the morning trade. Okay, that's 181 here, and here it is. Okay, this was I think we opened up, came in, and what did we do? We tested, this spot right here, tested where we broke out from in the afternoon, and this is kind of what I went over in the morning call. Remember, I showed you the igniting bar, the higher low, the afternoon consolidation, and then we took off. So this didn't quite get there, but I was like, if it's any good, and they want to keep some of the shorts tight, they hold higher. And then you had a move up, which happened fast, and I think a lot of guys caught that. And then you had yesterday's high, which was right here, that it played with a little bit before giving you another push of $1.50. And then, pretty much this trend from the morning got broken right here. And that's when you had to say, okay, now let me give it some space, and then you had a pretty sizable move down, which I don't think a lot of people were expecting, but in this grand scheme of things, not that big. And then it bounced back. So we'll see how we open tomorrow. You have a little bit of a new wedge here that we could figure out. But all in all, nice move up, a buyable dip, a push through the highs. You can't really, ask for too much more than that, as far as, actively trading. A lot of guys, like last Thursday, I wish we had the same move. Last Thursday, we had a great day, and the next day we were down 40 handles and got slammed. So today it didn't happen. Oil obviously helped us. Oil had a bounce off the inventories number. We said watch that at 11 o'clock. And then Draghi saying, they'll do whatever anything takes again, but we'll see. As far as sectors, the IBBs, had a little bit of a push and then came back. This was, actually this is your 5-minute chart again. Big push, came back in probably a little further than people would have thought. Before rallying. Let me just get to the daily chart for this. I'm not going to go over the micro stuff here. Let's just look at the daily again. So all in all, you had a great trade yesterday with relative strength. It's still holding, above it. But again, the 8-day has been too much for the markets to get above. So maybe a little bit more time it'll happen, and then there could be a good little push there to the 21-day. But at this point, it's still broken, below all the moving averages, a good day trade, and not too much more yet. The Russell also was red too. Russell yesterday was a good day trade. I took some home overnight. I bought some pre-market also, and it gave you a push, and then that was it. And what did it do? What did Quinky dink? It failed at the 8-day. Let me get my little pen here. I keep talking about the 8-day as being resistance until it's not, and right now it's resistance. You could have bought it in the hole, bought a little bit down, failed at resistance. Now if it stays above this spot, gets a little tight, and we want to bounce a little bit more, maybe that'll be a buyable pivot area to get a squeeze. Back to what? The 21-day, just like we're going across. Talked about how maybe, Google, the best stock out there, could be one of the stocks to take back the 8-day. Gave you a good trade, and then it just didn't hold up. This market still has a lot to prove. This is your pattern on Google. At least you got your day-and-a-half trade. Red dog reversal right here. You got a little push above the prior high, but then you had to take it. Went through, at least it did a little bit better than this time. Look what happened last time was at the 8-day. So there was a trade there. Okay, and it was down $3 when I walked in the door, so you could have been a buyer in the hole for a push up. Amazon, the same thing. It could have been a buyer in the hole for a push up, but what did it do? It actually wasn't strong enough to take back the 8-day. Here's your reversal. Here's your next day. Much better than some of the traps we've seen out there. Now we'll see what's next. So, for me, I love those day-and-a-half trades where you get the reversal. You take some home if it opens up. You sell some if it opens down. You try and buy some more of the strongest things. They go positive. They push through the prior high. They get a push. You sell it where you can. Trade's over. And then you figure out if then you could see some commitment sideways action before some of those lower pivots get broken to the upside, or we just turn back down. Netflix, a little disappointing today. I think they had an outage. Maybe that was it. So this is telling you that even strong momentum names are having a little bit of trouble buying higher. Here was your big resistance. This was yesterday's reversal. Today, after going back and forth, it closed pretty weak. Still in this range, but not something I would be taking home long. Facebook also went red. Facebook gave you a little bit of an extra trade, but not much. Here was your red dog reversal into the 200-day, and then and then what happened? And then it gave you a little extra push, but what did it get? What did it get failed at? The moving averages. So maybe it goes sideways a little bit for something else. For right now, it's still holding higher, but the jury is out. You don't have to be so big. So I talked about the push in oil. I said watch for the 11 o'clock number. USO finally had a decent one green bar. Look at that. Hey, one green bar is so important for everybody out there. The XLE actually gave you a decent trade also for some people who were waiting. All in all, you had your little reversal. You had a trade above yesterday's high, and this one, what did it do? Got to the 8-day, which it's been below for quite some time. So we'll see maybe if there's a little bit more. That's all we're looking for. Is there a little bit more? That's what this world has come to. But anyway, here is it broke below this, and then now it's trying to figure out if it could clear this lower pivot, to perhaps see where it broke down from here. And we're not even talking about where it broke down from, in December. So anyway, maybe there's a little bit more room here. So that's why you don't want to just short too quick. But again, it's been broken for a while. That's really it. It's Thursday. It's been a long week. Thank goodness. For those prepared, we had levels for you, and you were able to take advantage of them. I think guys on the VTF had a great 2 days because, we isolated 1820. The buyable spot in the spiders are 181, 183. Guys in the chat were talking about the range not to get involved too early today, and the guys waited and got a good push, and I don't think anyone was buying higher. We've learned not to do that right now. It may be able to go higher in the next few days, but no chasing anymore. No buy momentum. You got to buy in the hole, and if you get a little momentum, you try and stick around, but then if things start to fail intraday, you get out of the way and you figure out more compelling prices. So the oscillator was minus 100 yesterday. Now it's minus 40. So it's still a bit oversold. There's still a little bit more room, but the market has a lot to prove. And that's that. I'll see you tomorrow. Have a good night tonight.